What's up, everybody? Welcome to the Stocks channel. Today, the bulls held support even though we had plenty of volatility after we got the CPI data. Tomorrow is going to be the PPI data, so we could have another volatile day, but overall, it looks like the bulls are well positioned to continue to push higher. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So anytime we get these economic data reports, the market is going to use that as volatility to move the market. And I did warn you yesterday that we could get a flat day today because a lot of the move was already likely priced in. And when we get these flat days, it really hurts the short-term options traders, which we know there are plenty of in this market. So even though we do have PPI data tomorrow, don't expect these huge breakouts and huge moves, especially because tomorrow is Friday and there will be some weekly options expiring. So don't fall for traps, make sure you have a trade plan, and make sure you give yourself time for these trades to work, which includes buying shares and not necessarily always just jumping on short-dated options, which, as you know, if you're a follower of mine, I strongly suggest you don't bother trading options. You are going to be much more disciplined and profitable if you just stick to shares. So looking at SPY, we're staying bullish as long as we can hold above this rising 20 daily moving average and this breakout at 475, which means we're bullish above 472 and 475. And if we get a strong rejection and break through that support, and then we come back down to 467 and break that, then we're getting a lot more risk off because we're likely going down towards 458. Now, if you look at these Bollinger Bands, they are squeezing, and it does look like a very large move is coming after this sideways consolidation that we've had since about the middle of December, and eventually we will break out of this range and get another leg in this market. Right now, it looks like with the bull trend, we're pushing higher towards brand new all-time highs, even though there will be likely shakeouts along the way. And if you did get shaken out of your longs today, it's likely because you didn't have a plan, so make sure you have a plan around following the price action at these critical levels. There's two arrows on the chart, and we're staying bullish above the rising 20 daily moving average, and the critical support to get risk off is going to be all the way down here below 467. So if you want a closer risk level, you need to be managing a risk between 472 and 475. Let the price action do all the talking and have these levels in your trade plan, and then react to what the price is telling you. On the NASDAQ 100 triple Qs, we were at 0.21% today, and intraday we did test support at the breakout at 404, and we did bounce from that level. So once again, the bull showed up and held support. As you can tell from the arrows, as long as we're above 404, I'm expecting 414 and then 420. And if we break below 404, we're likely coming back down towards 396 to 391. Let the price action do all the talking, and while we're above 404 and having the bull trend, the price action is doing all the talking, telling us we're likely going higher. In the Dow Jones, we were up 0.06% today, so we went absolutely nowhere, but intraday we did make a brand new intraday all-time high, and there's no way that can be anything other than bullish. So while we're above 376, you need to stay bullish in the Dow Jones, and the rising 20 daily moving average is now at 375. This is a strong support zone that tells us we're likely squeezing into the 380s as we squeeze out the shorts, and we're only getting more risk off if we break down below 375 for a retest of the next support at 370. On the Russell 2000 IWM ETF, we were down 0.78% today as we're still below a negatively sloping 5 EMA. So if I were to move this arrow or redraw this arrow, I would say it's possible we go a bit lower down towards the support trend line and then push higher towards the gap close. But with this being a lot more upside than downside, I think you could start buying here in the 190s, knowing that if we get to the 50 EMA, that's going to be the critical support we need to hold to maintain the bull trend. So in the small caps, I'm still bullish in the longer term, but this is a longer term swing trade idea, and we are likely going to be a lot higher in the small caps by the end of the month. But as always, you need a risk level, and the risk level right now is going to be down here right around 189. So as long as we're above 189, I suggest you stay bullish in IWM for this gap fill above 198 and a push back higher into the 200s. On the ARKK ETF, we were down 2.37% today, and ARKK is testing that critical support at 47.5, which is the rising 50 EMA, and we did close above the support at 48. Above 47.50 to 48, we could still push higher, but if we break down below it, it means we're likely coming back down towards 45 to 44. On the VIX, we were down 1.97% today, and the VIX is continuing to make lower lows, which tells us fear is leaving the market, and if fear is leaving the market after CPI data, it likely means the market is still bullish. We do have PPI data tomorrow, so watch the VIX yet again, but if the VIX continues to go lower, it means the market is likely going to get a bull breakout. On Bitcoin, we're currently down nearly 1%, and Bitcoin did get the approval for the ETFs today, so there are a lot of ETFs now in the stock market where people can now buy Bitcoin through ETFs, and that is going to bring a lot of cash flow into Bitcoin in the long haul. But in the short term, you have to realize that this is known news, which is meaning it's a buy the rumor and sell the news event, which increases the probability people are trying to leverage for higher moves. And these people are bad traders who don't understand sell the news events, which is going to significantly increase the probability we do get one of these Bitcoin flash crashes back down towards 38,000. Again, this is just speculation on my end because I've been around long enough to see Bitcoin do this plenty of times. And when there's too much euphoria around Bitcoin, it typically crashes before it goes higher. However, I give you two arrows, and the arrow to the upside means we need to start closing above 47,500, and then I do think we will push higher towards 50,000. With that being said, I am not super bullish on Bitcoin right now while everybody is jumping on the bandwagon with the ETF, so I'd be very cautious here. And I would not rule out this possibility that we're going to see some very high volume selling to shake out the newfound retail bulls. On Nvidia stock, we were up 0.87% today and we slammed into my price target, which is right there, right around 551, and we did close just below it, and we're also still outside the upper Bollinger Band. So with us hitting this price target, this doesn't guarantee that we can't go higher. Do not confuse with an arrow that some guy drew on a chart as a path that cannot be crossed or a wall that cannot be broken down. As you can see, I do have higher price targets above, but I just want you to be cautious right here at 550 because we have pushed very far and we are outside the Bollinger Band for 4 days now. Again, that doesn't mean short it and that doesn't mean we're going lower. It simply means be cautious and don't be afraid to lock some profits here. If we do start to pull back, just watch this level right around the 530s, which is also the 5 EMA. And as long as we can hold above the 530s, we're likely still going to push higher. And I still think it's possible we're going to go into the 600s. On Tesla stock, we were down 2.87% today, and Tesla slammed right into my price target, which is going down towards that gap fill at 225, and that is exactly what we did today. Notice on Nvidia, we had an arrow pointing higher, and on Tesla, we had an arrow pointing lower, and the only way we knew one was going lower and one was going higher is because we're following the price action at critical levels. I told you Tesla below 244 was likely going to 225, and that's exactly what it did, and I told you Nvidia above 504 was likely going to 550, and that's exactly what it did. That's not me being some kind of magical magician or wizard, that's me simply following price action and being disciplined. That's what I'm trying to teach you to do, and right now with Tesla closing the gap and outside the lower Bollinger Band getting oversold, I do believe this could invite buyers, and if we get enough buyers and push Tesla back to 244, that is the decision point of whether or not Tesla is going to put a lower high or a higher low, and then continue to push higher in a bull trend. So I do like Tesla down here, but it is a falling knife, so you have to respect that, which means we could go lower, and if we break down below 225, I have us going down towards 215. If we bounce from here and we break back above the 200 daily moving average right around 231, then I do want to see a push towards 244. And if we break through 244, I want to see another push higher towards 255. So if you're a Tesla bull that doesn't mind catching a falling knife, this is where your ears should be perking up, and these are the levels you should be paying attention to. On Apple stock, we were down 0.32% today, and Apple is still getting those bullish closes above the 5 EMA ever since we started bouncing off the rising 200 daily moving average, and I still think we're pushing higher in Apple stock towards this gap fill just below 192. But on the way towards that gap fill, we are going to have resistance right around 188 and just below 190. Stay bullish above 185, and if we break below 185, we're likely coming back down towards 182, and as long as we hold above 180, we're staying bullish, and we're getting risk off if we break below 180. So jumping back over to the S&P 500, we are getting plenty of inflation data coming through the pipe, which is likely going to allow this market to break out of this range and start moving. And if you look at SPY, we've been in a range going all the way back to the middle of December, and we're about to break out of this range and get a next major move in this market. And because we have the bull trend with the bullish price action, there's a very good chance that next leg in this market is going to push SPY higher to a brand new all-time high. If that doesn't sound likely to you, then just simply look at the Dow Jones and the triple Qs, which have already made brand new all-time highs, and you can easily see how the S&P 500 is likely just catching up. Do not have a bear bias when the charts are looking bullish. This is the same lesson I taught a lot of you last year, early in the year, last year in 2023, when a lot of people were calling for crashes, and I continued to warn you that the market looked like it was reaching a bottom and getting ready to go back into a bull trend. Let the price action do all the talking and follow the trend, and the trend is still bullish, and the price action is still bullish while we're above all these critical support zones. We are absolutely crushing the market this year in Bank Trade Alerts and the Stock Channel Discord server, so I would love to have you come join us and crush the market with us. You can find out how to join Bank Trade Alerts below, and that means you will get all of your buy and sell alerts for the TQQs and the SQQs via email and text message. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stock Channel Discord server. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.